time.
Hello and welcome to Money Matters. I'm Sarah Peterson, here with Dean Greenberg of Greenberg Financial Group. Look at that smile.
Every time we cut together, it's just fun.
That's what I love. Who can make money fun but us, right?
We try.
Absolutely.
We try to educate, too.
Educate. I was thinking about that this morning when I was getting my kids ready for school. Why they don't have these types of classes. Even for the little kids, 3rd, 4th, 5th grade, my kids have a lot of questions. This should be part of our formal education.
You know, it's funny you say that. I've been coaching football down here at Tucson High in Tucson, and I spoke to the principal the other day about trying to do a class on basically financial literacy and stuff. And she goes, oh, do this and do that and do this and all. And then it came down to, well, you can be the son. I said, let me know what I can do, and I'll figure it out. Because there's no doubt that kids need so much real life stuff. And so we'll see. I'll let you know how that progresses, but I would love to be able to teach that.
Wouldn't it be cool if you could really get it into the curriculum, like statewide, nationwide? It's something that all
Here's
of us...
my idea, okay?
Uh-oh.
No,
Get
it's
ready.
a great idea. Your grade is based on how much money you earn, all right? So if you come to class, you get $25,000. If you do well on like on an exam or a presentation, you can maybe get $100,000. And in order to get an A, you need $1 million in the class.
Love it.
Okay? And the more money you get different rewards for getting there. So it's like real life, you're working, this is real life things that you're doing, and then you start teaching them, okay, so now you have this extra money, you can invest it. So maybe that money can make more money or less money for you. But it's all about, not the grades, it's about how much money you earn by doing stuff.
Maybe this is something we can implement at home and see how that works out. I think the kids would really respond to that. It's something that I, as an adult, wish I started
not real money.
younger. I get that.
It's like you make Monopoly money.
Thank you for clarifying.
But you have to make it, I want to make the class, how to earn $1 million.
I love it.
Yeah.
Well, this
Or
is
how to be a millionaire.
basically this is what you're doing for your clients, right?
Right.
I mean, every time I've had a conversation with you, I feel like I leave learning something new. And even as adults, sometimes I think we're intimidated to come to a conversation saying, I don't know the answer to this, because we feel like at this age and stage we should know. But many of us, we get out of the gates from college given a 401k and no direction as to where that money goes or how to invest. And we're off to the races, and we don't revisit it again until different phases of our life.
It's not even just college. It's people retiring. It's people retired. It's people with $100,000. It's people with $10 million. They do not understand the financial game. They don't. And we talked to them about it, and I'm shocked, okay, on how many people want a financial plan, even if they have $5, $7, $10 million. I'm like to myself, well, how did you get to this point?
Right.
It's because they knew what they were doing, and they put themselves in position and did a great job of investing their money and working hard and doing the things they did, whether it's a business or something else. But they want that because no one gives it to them. I think it was 69% of people say they want a financial plan. 28% have done one.
What do you think is the roadblock there? Why people aren't pulling that trigger? They don't think that they have enough money to do that, or they're intimidated. What do you think?
I think they don't want to be sold something. And they're afraid if they go to something when it's complimentary or free or whatever we tell them, there's always a catch to it on the other side. Mm-hmm. And when I tell them, you're probably right at some times. There's no doubt I want to show you where you are and what you're doing, and I'm going to give you the plan whether you do business or not. But if you're going to do business, my idea is you're always going to have to find someone that you trust. Well, if you do all the stuff for them and do the work for them, 80% of them, if they have to do something, they're going to go work with you. And a lot of people don't have that philosophy. They have the salesman philosophy. I have the educating philosophy. Educate them, make them feel good, answer their questions, show them how they're going to get to what they need to do, get them to understand you know what you're doing, then they develops a relationship of trust, and that's how you become clients.
Do you think that there is a level of intimidation with people just wanting to come to you and say, hey, Dean, I don't, here's my statements. I don't really know anything about what's going on.
Absolutely.
Yeah.
Yeah, they're afraid they don't know anything. Well, anyone that makes someone feel stupid is in the wrong business. Mm-hmm. Okay? We better know more than what they know. all right? And not only that, we better be able to teach them what they don't know so they feel comfortable. All right, and then that's how I say that's how you separate from one to the other. If someone's telling you stuff and they really can't make you feel comfortable or make you understand what they're doing and what you need, then that's not the right person for you.
So at the end of the day, what we're talking about is taking all this information people have and making sense of it, putting it all into a plan that they can utilize to plan their future, their financial future.
Remember, a plan is how to protect yourself, how to retire, what your cash flow plan looks like, what your estate plan looks like, what your retirement plan looks like. They're all plans that come into one thing called financial plan. And when you do that, and they see it, and then you go through all the simulations of what are the chances of the plan working out this way with what you have, it becomes a reality to them.
And I think it's invaluable because as we get older and we're getting close to retirement, it's a scary thing to say, hey, my income might go down, but my lifestyle might not change, right? So there are a lot of things that go into play with trying to plan whether I'm gonna lose it all or not.
Who doesn't think about that? I think about it all the time. Okay, what am I going to do when I'm 65? What am I going to do when I'm 70? How much money do I think I can have when I'm 75 years old? Where am I going to get the income? What kind of income? Then I'm thinking about, okay, if I am there, how am I going to spend the money? All right, what do I want to do with it before maybe health goes wrong or something like that? So it's like you're planning and you're planning for the problems that can happen. So you want to do things earlier just in case, because we never know. But it's all about the plan. And once you get that plan, you feel so much better and the stress is relieved. And that's what I tell everyone, relieve their stress.
I think we all could use that nowadays. So I wanted to make sure everybody has that phone number. It's 520-544-4909, or you can scan that QR code. It'll go right to Dean's office. Please do have patience because the phone lines get busy. But we'll take a quick commercial break. We'll come back and talk more about investment strategies and how to plan properly for your retirement. Stay with us.
This is Money Matters with Dean Greenberg of the Greenberg Financial Group. I'm Spike Spangle. Dean, what really got you started in this industry?
It was because I was working for Ford Motor Company. I had ordered all the dealerships and I kind of looked at things and I said, this is not what I want. So I went back and got my MBA in finance and investments and said, I'm going to work on Wall Street. I didn't really know the journey I was going to have until later on, 1987, when the market crashed.
Yeah. Black Monday.
Black Monday. The only person in the company of 600 and some odd brokers. I was buying IBM and I opened a $500,000 account. So they say to me, hey, this is unbelievable. How did you do this? What did you do? I just said, because I thought it was the right thing to do. Down 20%, it was probably a good time to buy, and I was more of a technician and an advisor and an educator at that time. Long story short, they tell me a week later I never owned the stock. The back offices back then could not handle 1 billion shares a day. So a week and a half later, they tell me I don't own it, and I needed to call the client to tell them they didn't own the stock. And I told them that they should pay the client. Next day I came in, my box of stuff was in there, and they told me I was fired. And I went to go see the guy I knew to go get a job. And he said, Dean, I'd hire you tomorrow, but you need to start your own business. I laughed at him and said, how am I gonna start my own business? I only have $5,000. He said, figure it out. We're all salesmen. You educate, you care about the markets, you care about your clients. So I guess I figured it out.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group, and we're talking about the importance of a financial plan and how we're going to get ourselves organized financially so we can get to our retirement and enjoy.
It's not even just getting there, it's just understanding where you sit. You know, we always talk about financial plans. And before 2019, I never really talked about financial plans much. Most of them were just to sell insurance, whether it's to sell life insurance, LIRPs, annuities. Most of the financial plans came out of the insurance companies there. But since then, I guess most people that are advisors now realize, no, that a real financial plan does it all. And that's when we started getting into it much more. And, you know, a lot of people use the same one, Money Guy Pro, but you got to learn it. You know, I sent a young guys for 2 or 3 day workshop to find out the intricacies of how to really use this program. And they only get better at it all the time. And we use a team approach at Greenberg Financial Group so everybody understands everything that's going on. And it's really fantastic because now the plan tells you what you really need. And then you work with the client and it makes sense to them because they see it. We got a nice little conference room, nothing fancy, and we have a nice big screen TV there. So we all look at the TV with all the stuff that's on it, and everything makes sense in living color. And we're able to go through it, and people enjoy that.
I think a lot of people resonate with your team approach too, because you have a sports background, you coach, right? And football is your thing, right?
And lacrosse.
And lacrosse. So I think a lot of people resonate with that.
You don't like football, do you? I could just
I
tell
love
you.
football.
You're a soccer person, I can tell. That's the first thing we're going to disagree on.
No, I love football, but football takes over my household. I have a son, I have a husband. It's like you can't have a conversation anytime it's football season, I'm out. So I take a back seat. No, but a lot of people resonate with that, team perspective, because it's nice to know there's not just one person. When they give you a call, it's not just you. You've got a whole team of people, and it's kind of one-stop shop, right? So
I'll give you an example. 2 days ago. No, yesterday. Yesterday was Monday? Yeah. No, 2 days ago. I don't even know. Whatever day it is. Somebody called in and asked for Todd, and he had just left and said, "Is Dylan there?" Just left. I said, "This is Dean. Can I help you?" And she goes, "Maybe. This is what I was looking for." I got a phone call about, taxes and stuff like that. Should I be selling? Should I not? And I pulled up the account and knew everything about the account because I did the plan with them. And we went through it for 20 minutes, came up with a solution on what we had to do. And she was so appreciative because and I know when you call, you want to get a solution. You know what I mean? You're calling because you got some time to talk about it. And granted, she did call late. It was, it was after 4:30, and obviously we closed a little earlier than that most of the time, and I was there. But she was happy that somebody was there to talk to her, that understood, other than the other two that she called for, of what was happening. And that's the team approach, and that's why I love it.
Well, and your son Dylan, obviously younger, and Todd is a younger guy, and so different perspectives. I mean, this isn't something just people who are, in that retirement red zone are worried about. We should be starting these plans young. We need to start as soon as possible, today.
But it's funny, we do the plans for the people in their 20s and 30s who really need the plans. They can't stick to them. They got kids, they got houses, they got mortgages. They got all the things that come about. So at least we try to get them to put a little bit away for their kids, for education, a little bit away for them, make sure that they have the life insurance. So whatever they can afford, we work within. The people that really get into it are the 40, 50, 60 years olds. Because whatever they got, they're starting to do. And when they're switching jobs, they really like it because now they can take what they have and move it into a better investment vehicle, hopefully, and be able to start planning and going forward. And I tell them, a relationship with a plan is forever. Mm-hmm. It changes. Things happen. And you go through it, and you sit down, and you meet with your advisor, and you go over it all the time.
How often do we need to be revisiting our plans? This is not something set it and forget it.
Well, this is what I'm going to say. You should always look at least once a year, okay? Depending if everything's the same. But when things change, health, increase in pay, less pay, changing jobs, whatever it is, meet. Make the discussion what do. If you're coming up to what should I do with my pension? Should I take the lump sum or should I go ahead and just take the money out? Or how are we going to make this stuff before? That has to be done beforehand. Mm-hmm. Fill in the gaps. The biggest thing is the gap. Someone wants to retire at 65, but they don't get Social Security to 66 and a half, 67. Now that you have to sit down and how are we going to fill that gap in?
Bridging the gap. I love it. Well, talk to me about what you're seeing now. How are people feeling with the current political climate? Are they scared? Are they feeling more aggressive? Or do you feel like maybe you want things to be a little more conservative now?
Yeah, well, everything we do, the way I've always looked at investment is risk reward. And when the markets are low and we're oversold, I always look at the reward gets better than the risk. Then when we get overdone and the markets rally and we get too high, then I think the risk is greater than reward and we pull back. I believe we're kind of balanced right now. This is going into fourth quarter. Things look good. It's all going to be about interest rates, will the Fed raise rates and not stuff like that. But we're always mitigating risk when we have to. At the end of October, we took off our risk mitigation. So that gave us a little bit more reward to the upside, but we haven't really added that much more in of what we think we should be. So we're still cautious. We figured there could be a rally into the fourth quarter, but it was just a rally, not the start of another bull market, in our opinion. Because the way I look at it, if they lower interest rates, one of two things are going to happen. If we have a slowdown in the economy, which is not good for stocks, or we have some type of disaster situation in the Middle East or anywhere else, and that's not good for stocks. So the idea of lowering interest rates just for the sake of lowering interest rates, I don't think happens. But I do see it happening if things are slowing and stuff like that, because we don't want to have a bad recession if we have one. If we stay where we are, we're going to have high inflation. Even though it's coming down, it's still going to be higher than what we want. And we're going to still maintain pretty higher interest rates on a relative basis. So with all that said, how far do we go to the upside? So yes, we're cautious. We're balanced right now in our risk-reward strategy. Obviously, if people follow us on our radio shows and our Sunday show, they'll know when that changes. But right now, I think that I would stay invested.
So let's talk about the plan itself before we go to commercial. I just want people to understand what this entails. So I give you a call. Hey, Dean, I need to get a financial plan in. What do I need to bring you and how does it work?
Okay. So what happens, either they contact us off our website or they call us. We get back in contact with them with an email. We thank them and all. And then what we do is we tell them all the things we need before they show up and try to get it the best they can, which is like, what are you going to get for Social Security? What's your pension? What's your best estimate of your budget? Just different things like that. We put it all in. We set an appointment. They come in. We spend a good hour or so with them, maybe longer, depends on how much we, in detailed and how much we chat. I never want to just do business. I want to know the people. And so we do that, and then we kind of then analyze it when it's done. And they come back, and we discuss the pros, the cons, and make suggestions, or tell them they're in great shape, and then we go from there. So it's a 3 or 4 point appointment process.
And this is something that other advisors are charging thousands of dollars for, and this is something complimentary to our viewers for taking the time to get educated with us and having some fun. So that phone number is 520-544-4909, or you can scan that QR code. If you're calling us on a weekend and you get a voicemail, just leave us a message and we'll get right back with you. And please stay with us because we're going to come back and get to some of your fantastic viewer questions. We'll see you in a minute.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Hi, welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group. And Dean, my favorite part of the show, when we talk with...
I love when people call in with questions.
It's great. Well, a lot of the questions that they have, somebody else has. So it's great information for all of us. You ready?
Yep.
All right. I'm 67 and my wife is 65 and we both plan on retiring at the end of the year. How do we know that we're ready to retire?
You don't until you sit down and you do a plan. You might think you're okay. You might think everything's fine. And, obviously, if you have stayed abreast of how much you're spending and all, You do it. So say you don't want a financial advisor, you want to do it on your own. You got to put a budget together, which means how much money you have coming in from Social Security, retirement, pension, whatever it is, and then how much money you're spending. If you're spending more than you're actually bringing in what I consider income, then what are we going to get off your investments? And how much are your investments, and what can they produce for you without running out before you're no longer here?
There is a financial component, obviously, but a lot of it's emotional, correct? I mean, deciding if you're ready to retire, there's a lot that goes into that decision.
Well, when people come to us and talk to us, that's one of the things we always talk to them about. What are you going to do after retirement? What do you like doing? I can't tell you how many people just say, well, I don't want to travel that much. I don't want to do this. We're very happy. We're very frugal. We just want to pitter-patter around the house and do it. And that's great for them. Other people come and say, I want to spend more money than I have. And we, and they laugh, and then, we all laugh. And then we say, well, let's get you to a point that you can spend money and not run out of money. But it's a very emotional. The biggest emotion thing is, and they've admitted it, that once their income goes away, the burden of investing and watching it go down is very difficult for them. And inevitably, they're going to make the wrong decisions. And that's why they like using people like us.
Well, and I would think it's really important for, if you're married, having your spouse with you at a meeting like this, because I'm sure there are differences between somebody wants to retire, somebody doesn't,
Well, first of all, never assume who's in charge of the money, ever. Okay?
Really?
Yes.
Shocking.
Yeah, I know. A lot of women do the money at home. They do. And then some of them, the older ones, some of them, it's the husbands, and then the women have to learn. So the husbands bring their wives in and say, listen, I wanted to meet you. This is what we're doing. This is what we're going to need for her. And the others, the woman's the decision maker. But never be in a meeting that you're not including both of them. They'll tell you if, I don't know anything, or they'll say, by asking questions, who's there. You got to be observant. You got to be in tune of the situation you're in if you're going to relate to them. So at the end of the day, you should always be there together, unless one of the spouses just doesn't care. Just say, I trust you, do it that way, and then we deal it that way.
Yeah, I mean, it's an interesting topic because I've seen it go both ways, where somebody is really ready to retire and the other person doesn't want them to, or vice versa. So it is, I'm sure, really nice when everybody's on the same page.
Well, the biggest thing is, my husband's going to retire. My biggest fear is him just being home and being a pain in my butt all the time.
Exactly.
And he's like, what are you talking about? I want to retire. And then they get through it, and then we talk through it. So what are you going to do? What do you want to do together? You know what I mean? I love the ones, like the wife really wants to do some traveling, and the husband's like, yeah, I don't know. And then I say, okay, what you're going to do is figure out where you're going to take one trip at least that she wants to do. Or the ones that don't want to spend any money, but they want to spend a little. You can spend a little bit more money.
This is financial therapy, isn't it?
Yes,
I love
it is. And they got to do stuff like that too.
I love it. All right, let's get to the next question. When interviewing potential advisors, what should I ask them? That's an interesting question.
Well, first of all, when you go see a financial advisor, you want to kind of have some idea of who they are and what they are. The nice thing that I've learned over the 35 years of doing radio and TV and being out there is that people come in and go, I feel like I know you already. If you don't know the person, you got to get a feel for it, and that takes some time. But the one thing that I had come in about 2 weeks ago, and our office is nice. It's not elegant. It's nice. It's comfortable. When we built it and did it, I did it with warm colors so people feel comfortable when they're there, and there's a psychology to that. You want them to feel comfortable. But they said we walked into this office and it was like really weird because it was like all these individual offices and they all shared the same person. So it was one of whatever the WeWork type places or something. Yeah. And he said, I just felt uncomfortable with it, and it was hard for me to listen to anything that they had to say to me because I wasn't comfortable. So it's the first impressions mean a lot. When you meet with somebody, okay, are they trying to talk above what your knowledge is? Obviously, you're not going to know everything, but if they're just trying to impress you by what they're saying, that's a red flag. If they're selling you stuff, If they're just trying to point you in one direction, that's tough also. If they just keep telling you that they're fiduciaries, that's a good thing to be a fiduciary. But if that's all they're harping on, I think that's horrible, because no matter what, the fiduciary means the client's interest always goes first. You don't need to tell somebody that you're good if you're good, okay? You don't have to tell somebody you're going to put their needs first, because they'll know if you are. If you're telling them that scares me, if that's all they're going to use. And, you know, and then so those are things. Then it's about, are they listening to you when you're telling them how risk adverse you are? Are they listening to you when you say, I don't want to do this and I don't like this? Are they listening to you when someone says, yeah, I don't mind annuities, but somebody else says, I don't want annuities, and they try to sell them the annuities and try to sell it? That's what you look for. Somebody that's on the same path as you. And then it depends, I hate to say it, it used to be, you know, like, you know, married people with religion. Now it's political. You know, people don't want to come in and be arguing with somebody, you know, feel like someone's always trying to talk to them about politics on the other side. It bothers them, you know, so don't talk about anything if you don't want to. You know, so it's a lot of different stuff right now that goes into the trust that goes on and how people feel comfortable. But at the end of the day, if you feel that there's red flags, do not deal with them. If you feel that you're comfortable and you want to move forward, and then see what they have and have a couple more meetings and see where it goes.
And some people may have a financial advisor currently that they've worked with, but maybe they don't have a financial plan. Maybe they've never discussed their plans for retirement.
There's a lot of people like that. Yeah. A lot of people said, my advisor did not ever talk to me about a plan. I like him, he's good, and then it's going from there. But a lot of those advisors are also older, and they're getting into retirement, and a lot of people coming to see us now because they're hearing us, they like what they hear, they want to see what it's about, because their advisor's looking to retire maybe in a year or 2 or 3, and they're looking around. And that's one of the reasons I went to the teamwork and got younger people in that I can train and teach and mentor that are very smart and very team-oriented.
There's literally no risk in picking up the phone and giving us a call, because all this is a conversation where you can let people know whether or not they are on the right path. Maybe they've never had these types of conversations, or maybe they have an advisor and they haven't talked to them about this. Either way, wouldn't you like to know now so that you can get on the right path and get to your happy retirement that you've deserved? And we always run out of time. I'm so sorry. Thank you so much for joining us today. That number is 520-544-4909. Give Dean a call, and we hope to hear from you soon. Stay with us until the next show.